Hello everybody and welcome back to the channel. So the stock market has actually gone up tremendously this week. Our RRSP, which only holds Starbucks, is finally in the green by 2.69% or $14. This has gone up about 14% just in the last month. So incredible. And our TFSA is continuing to climb out of the red. We're only down 1.18% or down $180. And the big change for the week is that I sold out of Canoe EIT completely. I really wanted some extra cash in the portfolio to take advantage of an opportunity to buy more Aritzia. So I bought some more shares of that. I'll show you how many shares I bought in just a moment and where else I put the money and where I decided to reinvest this gain from this stock. So please subscribe to the channel, like the video, leave a comment, and now I'm gonna roll the intro. So the TFSA is having a pretty good time right now. We're back over 15K in the TFSA. So just today we're up 124.81, or up 1% in the last day. Previous week we're up 9%, so up $1,249 in literally 1 week. This is why you need to stay invested in the market. You can't time the market. The bear market is, the price is volatile, but also the best days in the stock market happen during bear markets. So you can't miss all the bad days. You're also going to miss the best days, and the best days are where you make all your gains. Past month we're up 566, or up 4%. Past 3 months we're still down 6% overall, still down 1,000. Past year we're down 4%, and then all time just down 1%, or down 180.42. So the big changes here. Apple seems to be way back into the green, so the market is liking Apple, and the earnings report is going to be very soon, in the next week actually. So people are probably buying up Apple right now, anticipating some good earnings. It wouldn't surprise me if they had good earnings again. It's a very reliable company, so we'll see what happens with that in about a week. And the big change, we bought 2 more shares of AQN, so I reinvested the dividend. I decided to buy 2 shares, average down in this position, increase our dividend because they paid us about $10. And I'd like to get all my stocks up to paying me $10 dividends every single quarter, and then it'll cost me less and less of my monthly cash flow and deposits to continue buying the stock. I want them to get to the point where I can just afford to buy 1 extra share with the dividends that they pay me, and then my new deposits can go wherever I'd like, but I was still growing my existing positions and ownership of the companies I already own. So with the proceed of the sale, I actually bought 10 more shares of Aritzia. So we went from 2 to 12 shares. I'm really glad that I did, because Aritzia has just been going on an absolute tear. We're up already 10% since I bought it the previous week. So I'm really, really glad that I bought more when I did, and that's part of the reason why I decided to sell out of Canoe EIT. Again, great ETF if you're just purely focused for income, but I really decided that Aritzia, I think, is trading at a very good valuation. From my calculations, I think it's about a $50 stock. Not financial advice, of course. You can lose money in the stock market. I could be wrong. I have been wrong in the past. I've also been right on a few, but make your own research. Don't copy anybody on YouTube. Definitely, you have to pick stocks that fit your portfolio, your risk tolerance, and your goals, and depending on your time horizon. So everybody's different. I can't say what stock is right or wrong for you. You'll have to find that out. And the reason that I really got attracted to this company in the first place was just their earnings report. They had about 80% growth in the United States in their last earnings report. And the stock actually fell from like the 40s down to $33. It made absolutely no sense. They absolutely knocked it out of the park. The market was just in a panic the last couple of weeks, and this stock just got so cheap in my mind. It's trading in the mid 30s. I think it's 50. In my mind, it's just an absolute no-brainer. There's a large margin of safety, at least for my risk tolerance. And whenever they open a new store, so their expansion, they're planning to open 8 to 10 new stores. And it only takes them 12 to 24 months to get back all the money they invest in a new store. After that, it's just a cash flow producing asset for them. So that's incredible that they can pay that off so quickly. It means they're very efficient. They convert a lot of their revenue to free cash flow. And that's the reason I really believe in them. And they have 42 stores in the United States already, and they have a significant runway to grow. And they've already identified 100 locations in the States that meet their criteria. So that's why I'm really excited about this opportunity. They make very good quality clothing, just going from their winter jacket, the super puff jacket. So my girlfriend actually owns one, and she says it's extremely warm, like the warmest coat she's ever bought. So take that for what it's worth. Their clothes are definitely more expensive, but that works to their advantage, and that's how they have such high margins, because they source all the materials, they own all the logistics, they own the warehouse, and they assemble all the clothing. They own all the brands that they sell. So that's how they're so profitable versus another, just a generic clothing store that buys all of their clothes from a third-party supplier. I also picked up 10 more shares of DFN, so dividend 15. So it went from 90 to 100. So now this stock that we have will start paying us $10 a month of cash flow into the portfolio, which I can then use to reinvest in good opportunities. I also purchased another 2 shares of ETHY. So we just averaged down, got 2 more shares here. And then with Google, they actually performed their 20-for-1 stock split. So what a stock split is, essentially what Google did was, for each share of Google you had, it turned into 20 shares. Now, just keep in mind, this does not change the value of the company. If you think of it like a slice of pizza, instead of having, one slice of pizza, they cut that one slice of pizza into 20 slices. Essentially, still the same amount of pizza. It's just broken up into more pieces. So investors are more able to afford to invest into the company. So there should be more volume for the company, because, paying $2,000 for one stock isn't really affordable for people that are on brokerages that don't have fractional shares. Wealthsimple did. So I had like 0.2 shares, so about a fifth of a share. And then after the split, it turned into a little over 4 shares. So just keep in mind, stock splits do not create more value in the company, but it can produce a little bit more volume in trading in the stock, and especially with options, because you need to purchase contracts for a minimum of 100 shares, and it's a lot easier to have $10,000 to do something with, rather than $200,000 to do something with the shares, to even do options trading. So that definitely opens up possibilities for smaller investors. And then with the rest of the sale of my Canoe EIT, I actually put it into HYLD. So we bought 37 more shares. So we went up to 110 shares. So this one should pay me a little over $15 a month in income. And then with that, I can just buy another share, start dripping this essentially. So it's just going to buy myself a free share of this every month. And then with the remainder, I can invest it wherever I would like. So going to just continue doing that with my income funds. So it's nice to get them to the point where they can just purchase themselves. And then there's also some huge news with Intel this week, that the CHIPS Act is actually being pushed forward. And this is a bill in the United States that's going to subsidize chip manufacturing for the United States. It's about a $50 billion bill. And it's been advanced. So next week they're going to vote to finalize it. And should that happen, Intel will basically collect $20 billion.
$1 million.
For free, that they can use to build their factory. That's going to be a huge help for Intel. And, just imagine playing Monopoly. It's like basically Intel passing go and collecting $20 billion in this case. So great news for Intel. We'll be seeing the results soon. It looks like it's going to happen. Nancy Pelosi seems to think it's going to happen because her husband bought a lot of NVIDIA. So we all know how great of a market timer she is with certain legislation being passed and owning the right stock at just the right time. And Tesla also had really good earnings. So they grew their revenue. Their margin fell down a little bit, but the market really responded. So it just shot up today. Like it's up like 9% in one day. So Tesla's doing great, and they're going to continue to do great. And the market, and I think it's actually helping, people being optimistic about the market in general. But we'll see if that continues. For the dividends earned since the last update, annually we're earning $815.02 in dividends. So that's up $13 from the previous week, and that's mainly shifting our Canoe EIT, which was paying us about a 10% yield, into mostly HYLD, which is paying 12.5%. So doing that change freed up a bit of money that I got to purchase Aritzia with, but my income still increased overall in the portfolio, so I just took that opportunity. And the monthly average income went from $66.90 to $67.92, so went up about $1 a month, which is fantastic. Weekly, we went from $15.44 to $15.67. And then on the daily average, we're getting an extra 3 cents per day. So we are getting closer to our goal of hitting $3 a day in dividends. Or just taking this, one step, $1 at a time, pennies at a time. It will grow faster as we grow the portfolio. And then months to earn $100 has decreased from 1.49 to 1.47. And hourly wage for the portfolio, if it were to work 40 hours a week for us, still 39 cents, but that's pretty good considering I don't have to do anything for this. The portfolio is just doing it for me. It's paying for me, and it's just earning this money for me every month without me doing anything. So that's just a great thing. That's what I love about passive income investing. So that's pretty much it for this update. Please follow the channel, leave a like, and share the video. And one thing I'd like to ask you guys as an audience is there any other type of thing that you'd like to see me do in these updates, or like any other kind of content, or like any questions you'd like want me to discuss in a video? So please leave that in the comments below if there's any suggestions you might have, or any kind of content you want to see that you're not really getting anywhere else. And if you haven't joined Wealthsimple already, you can feel free to use my link in the description below. If you sign up and fund your personal account, you can receive up to $3,000 in free stocks. So have a great day, everybody, and good luck investing out there.